The coverage of corporate governance extends far beyond the traditional oversight of financial reporting and legal compliance. Modern governance encompasses the entire system through which organizations are directed, controlled, monitored, and held accountable for achieving strategic objectives while safeguarding stakeholder interests. Within the program, governance is presented as a comprehensive framework that integrates strategic leadership, internal control, risk management, regulatory compliance, and wider social and ethical responsibilities. These dimensions collectively ensure that organizations create sustainable value while maintaining transparency, accountability, and responsible corporate behavior. Effective governance, therefore, provides the institutional foundation for long-term organizational success rather than merely satisfying statutory requirements. The framework identifies governance as covering strategic direction, internal controls, risk assessment, regulatory compliance, and broader social and ethical responsibilities across both internal and external organizational environments. One of the primary areas of governance coverage is the strategic direction provided by the Board of Directors. The board is responsible for defining organizational purpose, approving strategic objectives, monitoring implementation, and ensuring that management decisions remain aligned with shareholder and stakeholder interests. Governance therefore influences corporate strategy by establishing organizational vision, determining acceptable levels of risk, approving major investments, and overseeing executive performance. Effective governance requires boards to balance short-term operational performance with long-term sustainability, ensuring that strategic decisions contribute to enduring competitive advantage rather than temporary financial gains. Through strategic oversight, governance becomes an integral component of organizational leadership and value creation. Corporate governance also encompasses control of organizational operations through internal control systems. Internal controls consist of policies, procedures, and organizational processes designed to safeguard assets, ensure reliable reporting, maintain operational efficiency, and prevent fraud or error. Governance frameworks require boards to establish effective control environments that support accountability and responsible stewardship of organizational resources. Internal controls provide assurance that management decisions are implemented appropriately, operational risks are minimized, and financial information remains accurate and reliable. Consequently, governance extends beyond strategic oversight to include operational discipline and organizational resilience through effective systems of internal control. Another critical area within governance coverage is risk assessment and risk response. Modern governance frameworks recognize that strategic objectives cannot be achieved without systematic identification, evaluation, monitoring, and management of uncertainty. Boards are responsible for establishing organizational risk appetite, overseeing enterprise risk management processes, and ensuring that significant strategic, financial, operational, and compliance risks receive appropriate management attention. Governance therefore integrates risk management into strategic decision-making rather than treating risk as a separate technical function. Effective governance enables organizations to balance opportunity with risk while protecting organizational assets, maintaining business continuity, and supporting sustainable long-term performance. Governance also incorporates the regulatory framework, including legislation, corporate governance codes, listing requirements, accounting standards, and professional ethical obligations that govern organizational behavior. Compliance with applicable legal and regulatory requirements protects stakeholder interests while enhancing market confidence and organizational legitimacy. However, contemporary governance extends beyond simple legal compliance by encouraging organizations to adopt principles-based governance that promotes ethical leadership, transparency, and responsible corporate citizenship. Boards therefore have responsibility not only for ensuring compliance with external regulation, but also for establishing internal governance practices that exceed minimum statutory obligations where necessary to support stakeholder confidence. An increasingly important dimension of governance coverage concerns wider social and ethical responsibilities. Organizations are expected to consider the environmental, social, and economic consequences of their decisions while balancing shareholder interests with those of employees, customers, suppliers, regulators, local communities, and future generations. Corporate governance therefore supports environmental, social, and governance (ESG) principles by integrating sustainability, ethical conduct, corporate social responsibility, and responsible resource management into strategic planning and organizational decision-making. Strong governance encourages organizations to create value responsibly while maintaining public trust and protecting long-term organizational reputation. Governance should be viewed as an integrated framework linking strategic leadership with operational control and external accountability. Strategic direction determines organizational objectives, internal controls ensure reliable execution, Risk management protects against uncertainty, regulatory compliance maintains legitimacy, and ethical responsibility strengthens stakeholder relationships. The interaction of these governance elements creates an organizational system capable of supporting sustainable growth, responsible innovation, and effective decision-making within increasingly complex business environments. Governance therefore contributes directly to organizational resilience by ensuring that strategic ambitions remain supported by robust oversight mechanisms and effective accountability structures.